Well, 2018 was the year the trade wars broke out. Then 2019 might be the year the global economy really starts to feel the pain of all of this. Bloomberg's global trade tracker says importers front-loaded their orders ahead of the tariffs, setting the stage for a slowdown next year. Bank of America is estimating that these wars have already cost the S&P 500 a 6% drop this year alone, while China's market has lost $2 trillion in value this year. So we bring in Ambassador Terry Miller. He's the director of the Heritage Foundation International Trade and Economics Center to break all of this down. Ambassador, thanks for coming on. I guess our question is how bad does it get before it gets any better in our negotiations with Beijing?
My goodness, there's so much good news in the market today. I hate to be the bearer of bad news here, but
you will be.
I do think that there is the possibility that if this trade war with China is not resolved, it can start to have a very negative impact on the U.S. economy. What we're going to see is prices rising. We're going to see pressure on the currency. We're going to see all kinds of investment pressure and a general slowdown both in global trade and global GDP growth. And that's not going to be good for anybody. And all that means is that the U.S. negotiators and the Chinese negotiators really need to get down to work and get the job done.
How much do you see the U.S. market decoupling from the Chinese market? And then is that a positive or a negative?
Well, I don't think there's going to be massive decoupling. The relationship between China and the United States is highly beneficial for both countries. So it seems to me that we're going to see some pullback, but maybe a rebalancing would be a better way to describe it, with the Chinese doing a little more purchasing, the U.S. doing a little more selling. That should be something that President Trump likes a lot and maybe could be a factor in getting this trade war resolved.
It doesn't seem President Xi is that willing to negotiate, unfortunately. A lot of folks say that's because he doesn't have to worry about term limits or getting reelected. So it begs the question, is an uneven playing field better than perhaps no playing field?
Well, I think the playing field, the more we get the governments out of trying to influence this playing field, the more level it will become. I'm a great believer in the power of markets to get the prices right and get the buying and the selling right. President Xi is in a very strong position, but he's not unassailable. He has to deliver jobs for his people. He has to deliver a high growth rate for the Chinese economy. And those are very real pressures for him, just in the way public opinion is a pressure on the president and his team in the White House. So I think both sides have an incentive to get something done here.
Ambassador, you have not killed the rally. The Dow is up almost 4%, so you've actually encouraged it, sir. Japan, an ally of the U.S., is set to cut tariffs on several U.S. allies, including Australia and Canada, in just a few days, and then again in February for many European countries. Do you see other alliances forming without the U.S.?
I don't think so. The U.S. has such a dominant role in the world economy. It would take, I think, several years of extremely bad economic policy on the part of the United States to even begin the process where there would be a major restructuring of international trade or international financial flows. These moves by the Japanese government should be very welcome by everyone, and I think will be good for the Japanese economy, and a stronger Japanese economy will be good for us as well.
All right, and on China and the trade spat that we've got going on with them, are you optimistic for 2019 or no?
I'm pretty optimistic. I think there's a lot of pressure to get something done by the end of March, and I think that our trade negotiators will, in fact, succeed.
Ambassador Terry Miller, thank you, sir.